So let's continue with the part 2 of the intraday trading in options. So I'm going to cover the first rule. We have to always trade in options using rules. So what are those rules? Let's cover the rule number 1. Please watch the part 1 as it's very much needed for continuity. A small intro again. Options trading. Options trading is modern day digital war. We can definitely call it a war where minds are pitched against each other. You make money means someone has lost money. Options trading is a battle which has millions of mind acting against each other. Never ever assume that you have the brightest mind. Bring no emotions, personal fears, feelings when you trade. You have to be very cool, very calm. No emotions. Trade only with the rules, discipline, experience, knowledge, which increases your chance of winning a trade. Options trading rules. Options trading always trade based on rules. I am telling you again and again. And if you follow these rules in a very disciplined way, I can guarantee you will see a remarkable change and will start making profits. I will tell you rules that I follow which have resulted in excellent trading profits more than 70% times. So what is the first rule? So first rule is always take a trade based on a setup. Never trade based on impulse or FOMO, which means fear of missing out. I will show you this with an example. What happens when most of the time we as traders log into our screens. So this is the Nifty 50 chart of 29 September 23, just few days back, the last trading session. If you logged into your trading terminal at 2:15 p.m., your first impulse reaction would be, my God, what a mountain Nifty 50 has climbed today. If you see, Nifty 50 went from 19,550 to approximately 19,750, approximately 180 to 200 points rally in the upward direction in just few hours. And now suppose you buy a call at 2:15 on impulse or FOMO, because you are thinking, your mind went crazy, you are filled with emotions that I have missed such a golden opportunity and I don't want to miss now. So you buy a call because market is in an upward trend at 2:15 p.m. on impulse FOMO and see what happens next. Around 2:20-25, market completely reversed, and it reversed very fast and did not give any time to anyone, and in another 30-40 minutes it fell around 100 points. And imagine the loss traders would have taken. They were not given a single chance to recover. Market never recovered. It fell and fell, making big candles. Only the traders who would have put some SL, smart traders, or would have followed rules, would have cut their losses. They would have also incurred loss, but their losses would have been, they would have taken the SL, stop loss. So always trade, rule number 1 is trade based on setup. So what is a trade setup? It is some basic conditions that you have put together that must exist for you to even consider taking a trade. You can create your own setup with knowledge, with experience, or with other sources. Lot of information is available on the internet, on books you read. And as with anything, if you consider a setup, you have to back test, front test for some time with data on paper before taking actual trades. Now I am going to show you one setup of mine. So this setup, I call it the 9:30 a.m. setup. So what is 9:30 a.m. setup? Since we are going to trade only Nifty 50 options, so open the Nifty 50 live chart, set it on normal candles, 5-minute candles. From 9:15 to 9:30, mark the high and mark the low of the candles from 9:15 a.m. to 9:30 a.m. Now after this time, after 9:30, whichever side the market breaks out or breaks down, you take trade on that side. And so this is the setup. Mark the high and low of candles between 9:15 a.m. to 9:30 a.m. Nifty 50. After 9:30 a.m., whichever time, 5 minutes, 10 minutes, 1 hour, 1.5 hour, 2 hours, when the market breaks, crosses these levels either on the high upside or on the downside, you take a trade. But what is the entry trigger? So this is the setup. This is the entry setup. What is the entry trigger? On which point you have to take a trade? So if you see a clear solid 5-minute candle closing either on the upside above the high level or below the low level, that is the entry trigger. If it breaks, if that 5-minute candle is formed on the upside closing, you buy CE. If that 5-minute closing candle is formed below the low point, low level, you buy a PE or put. I will show you with an example. We will again take the same chart of 29 September 23, which we saw earlier in this video. So this is the Nifty 50 chart of 29 September 23 and 5-minute candles. If you see, I have marked the high point between 9:15 to 9:30 and also the low point between 9:15 to 9:30. Now if you see, around 11:30 market broke on the higher side and gave a clear closing of 5-minute candle, and this is the entry point. We buy a call at this point. So just a quick recap. Option tradings should be rule based. Rule 1, always trade using a setup. In this video I have explained to you 9:30 a.m. trade setup. Also in this video I have explained the trade trigger to enter the trade. As this video will become long, I have released further session as another video. Please watch part 3. Thank you. Please like and subscribe to support my content.